The news has just hit the market. The Franklin XRP ETF decision has been delayed, and with that single headline, the crypto world erupted with frustration, confusion, and a wave of questions that strike right at the heart of XRP's future. Because this isn't just about one application, this is about the future of XRP being recognized by the financial elite. This is about whether Wall Street's doors swing wide open for the digital asset that has been fighting for legitimacy for years. Imagine the anticipation, traders refreshing feeds, investors gripping their phones, waiting for the signal that an XRP ETF would finally be allowed. The thought alone electrified the XRP community, whispers of billions flowing into the asset overnight, whispers of XRP finally standing alongside Bitcoin and Ethereum in the ETF spotlight. But instead of champagne popping, the headline delivered a gut punch: decision delayed. 3 words that carry the weight of uncertainty, 3 words that stall dreams, 3 words that remind XRP holders that nothing comes easy in this space. And here's where the stakes turn high, because ETFs aren't just financial products. They're gateways. When an ETF is approved, it tells the world that regulators, institutions, and the establishment accept the asset. It lowers barriers, it invites pension funds, retirement accounts, wealth managers, and the billions they control. And if you need proof, look no further than what happened to Bitcoin after ETF approvals, the tidal wave of capital, the mainstream adoption, the normalization. XRP investors were expecting the same. But this delay slams the brakes, at least for now. The emotional roller coaster is brutal. One moment you're envisioning XRP climbing past resistance, propelled by institutional inflows. The next moment you're staring at red candles, watching doubt creep back in, the SEC's shadow looming larger than ever, and traders asking themselves the question nobody wants to face: what if the ETF never comes? What if this was just another false dawn? But let's not stop at the headline. Let's break this down. Why was Franklin's XRP ETF decision delayed? What does it really mean? And is it a death sentence for XRP's institutional hopes? Or is it just another step in a process that was always going to be messy? When you look at the filings, you see the classic language: regulators need more time to review, a line that by now every crypto veteran has memorized. It's the same delay excuse that's been used on Bitcoin ETFs, Ethereum ETFs, and countless others. It doesn't mean no, it means not yet, but that nuance is often lost in the noise of the market. Because every delay chips away at confidence, every delay stretches out the uncertainty, every delay creates the chance for whales to take advantage of retail emotion, and whales are paying attention. Make no mistake, when news of the delay dropped, volumes spiked, order books shifted, and you could practically feel the quiet hands moving, some accumulating on weakness, some distributing to the impatient. Because whales know one truth: delay is not denial, and they play the long game. Meanwhile, retail feels the sting the hardest. Imagine being an everyday XRP holder, reading the bullish ETF headlines one week, watching influencers shout about billions in inflows, and then waking up to the reality of yet another roadblock. The cycle of hope and disappointment has repeated so many times in XRP's history that it almost feels scripted. From the SEC lawsuit to the countless partnerships hyped but underdelivered, to the court victories followed by new appeals, and now to this, the ETF saga. But here's where the cliffhanger lies: XRP's story has always been about resilience. Every delay, every rejection, every headline that could have ended it, has instead forged a stronger narrative, and that raises the most important question of all. Is this delay just another test, another chapter in XRP's long war against skepticism, a war it has survived time and time again, or is this the moment where patience finally breaks and momentum slips away? Because when you look at the history of crypto ETFs, when you study the path of Bitcoin and Ethereum, you realize something critical: delays are part of the process, but approvals, when they come, are tidal waves. So as XRP sits at this crossroads, traders, investors, and institutions are left hanging, waiting for the next move, knowing that behind the curtain, regulators, lawyers, and lobbyists are battling for the future of one of the most controversial, resilient, and promising assets in the entire digital market. The delay is frustrating, yes, but buried within it is a signal that XRP is now in the same conversation as Bitcoin and Ethereum, a signal that the gatekeepers of finance are taking it seriously enough to pause, to analyze, to weigh every angle, and that alone means something. But what happens next? What should XRP holders brace for in the coming weeks? And how will this delayed decision ripple through price action, sentiment, and the broader narrative of XRP's march toward global adoption? Because one thing is certain: the clock is ticking, the decision is postponed, but it will come, and when it does, the market will not be quiet, it will roar. When we talk about an XRP ETF, we're not just talking about a new ticker symbol on the stock exchange, we're talking about a bridge, a mechanism that allows trillions of dollars sitting in traditional markets to cross over into digital assets without friction. For retirement accounts, pension funds, and conservative investors, ETFs are the safe path. They're regulated, familiar, and easy to buy, and if XRP were to join that club, the floodgates could open. Think of Bitcoin. Before its ETF approvals, adoption was strong but capped. Most institutions hesitated. Retail traded it directly, but it lived outside the boundaries of traditional finance. Then came the ETF, and suddenly you had pension funds allocating, wealth managers offering it to clients, and mainstream media treating it as legitimate. Prices surged, volumes exploded, credibility skyrocketed. Now imagine that same pathway unfolding for XRP, the asset that has been both celebrated and demonized more than almost any other. Approval would mean more than inflows, it would mean validation. After years of fighting the SEC in court, after endless questions about its security status, an ETF would essentially stamp XRP as acceptable, investable, safe enough for the average retirement account, and that stamp carries weight beyond charts. It rewrites perception, it tells skeptics that the war is over, and XRP is here to stay. But until that day, whales are positioning. You can see it in the flows. Every time ETF chatter rises, accumulation follows. Large wallets quietly soaking up XRP, often at levels retail barely notices. And every time a delay is announced, those same whales adjust. Some distribute into weakness, others accumulate deeper. Because they know patience is their greatest weapon, they understand that delay is not denial, that the real payday comes when the approval finally lands, and until then, the volatility is their playground. This is where the psychology of markets takes center stage. Retail traders often react emotionally. They see the delay headline, they panic, they sell. And in that moment of weakness, whales scoop up their coins at a discount. It's a cycle as old as markets themselves, fear feeding opportunity, impatience feeding wealth, and XRP's ETF saga is the latest chapter of this timeless game. Short term, the delay impacts price in obvious ways. Instead of a breakout fueled by institutional optimism, XRP drifts. Resistance at 75 cents holds strong, momentum fades, and volume thins. Traders who bought the rumor are left disappointed. Some exit, some wait, and the chart reflects that indecision, sideways consolidation, pressure building but direction uncertain. But underneath the surface, there's something far more powerful at play. Because delays create coiled springs, they compress expectation, and when the decision finally comes, the reaction is amplified. It's the same reason Bitcoin didn't just rise after its ETF approvals, it exploded. Years of pent-up demand unleashed in one furious move, and XRP, with its passionate community and polarizing history, could deliver an even more dramatic reaction. And here's the cliffhanger. While the delay hurts now, while the candles bleed red, while sentiment sags, the truth is this: the longer the wait, the bigger the release. Patience is painful, but in crypto, patience has always been profitable. So the real question becomes, how do you prepare? Do you let the frustration of delay push you out of your position? Do you let the whales trick you into selling? Or do you hold steady, understanding that history shows approvals follow delays, and when they come, they move markets in ways no single retail trader can imagine? Because one thing is clear, the Franklin XRP ETF isn't a sideshow, it's a signal, a sign that XRP has entered the arena with the giants. And once that door cracks open, it won't close again. When you study history, you start to notice a pattern. Because this isn't the first time the SEC has dragged its feet, far from it. Look back at Bitcoin's ETF journey. Years of proposals, years of delays, years of rejections, headlines that screamed denied or postponed, and every time, the market dipped, traders lost hope, and the critics laughed. But where are we now? Bitcoin ETF volumes are breaking records, institutional inflows are measured in billions, and those same critics are suddenly quiet. History didn't just repeat. It rewarded those who held on through the storm.